Well, it's a fresh new year, fresh new series. Let's bring on board a guest to talk about the technicals of the market going into the new year. We have Mr. Gautam Shah joining us from Goldilocks Premium Research. Gautam, hi, good morning, and wish you a very happy new year from all of us at ET Now.
Thank you. Wonderful to be here on the first day of the year, and wish you and the entire team at ET Now a very happy new year as well.
Pleasure to have you on board. As we approach the new year, if we look back at 2020, it has been a roller coaster ride. It has impacted population across the world and the world economies. Look at the way the entire year pan out. Talk to us about some of your key learnings as somebody who closely watches out for market developments, market momentum. What have been your key learnings?
Well, we've always learned that the markets follow the concept of discounting, and I think that was completely on display in 2020. Because if you remember in the month of March, I take you back to the first week of March when you just had a few hundred cases of COVID in India and the markets collapsed. They crashed as if it's almost as if the markets knew that something, negative is going to pan out over the next few months. So the market was way ahead of the news. And now, as things have picked up on the ground in the last 1.5 months, you might have heard about positive news coming on the ground in terms of economy, in terms of power consumption, the auto sales, and with what's happening to the property market. So all of these positives have only come into the system in the last 1.5 months. But the market realized this, I think, 4.5 months back. And that's probably the reason you've had this stellar rally in the last 6 months. So I think the key takeaway for me is that the market is discounting well into the future. There was a time when we said that, okay, it's just discounting a few months into the future. Now I'm starting to believe that today's prices is on account of what the market is seeing a year later. So I think this sometimes can be very difficult to comprehend. And that's probably the reason technical analysis and price action study plays a very important role.
Right. Hi, this is Varun also joining into the conversation. Thanks so much for joining us today here on BNSN on the 1st of January. We're in a new world. Interest rates are very low. And of course, that's caused a lot of inflation on asset prices. In terms of what the markets are forecasting for next year, clearly the trend seems bullish. But what about inflation? Whenever you look back in history, quantitative easing has ultimately resulted in inflation. And then whenever that tide turns, it can be quite gruesome for the market. So do you feel that there are any lead indicators right now which might be hinting that inflation could be right around the corner? Or do you think we're still in a deflationary environment?
Well, since at Goldilocks, we look at things pure from a price action perspective, I don't think that's a question that, I would want to throw light upon, because that's not something that we do on a day-to-day basis. But I think 2020 has been all about price action and all about liquidity. And look at what the dollar index has done. I think the world is talking about it, the manner in which the dollar index has come down to the kind of levels it's trading right now. It just tells you that there is a very different scenario at play. And with gold and silver looking so positive on the charts, and with dollar index weakening, and with the rupee, setting up for possibly a mega uptrend, over the next many, many months, I think it's a very unique world that we are, living in right now. So just looking at the price action, I do believe that 2021 will be a positive year. You will see more upside, but then one has to be very specific about the themes one is investing into.
So any themes or pockets that you've picked out that could really outperform in this new year? Because last year clearly belonged to pharma and IT, and even banks saw a solid resurgence in the second half of the year. What is this year's trend? What are the stocks or rather themes you're betting on?
Well, first things first, I think Nifty has looked very solid. I mean, it's very difficult to outperform the Nifty in today's market environment. Because, always there are certain pockets in the Nifty which are doing exceedingly well. And if you look at the top 7 names, think of these top 7 names as players of a team. And when all of them are firing, you cannot expect the Nifty to cool off. And that's exactly what has happened in the last few weeks. So whether it's banks, some of the heavyweight IT stocks, heavyweight FMCG stocks, all have done exceedingly well. And as we head into 2021, I don't think it's going to be as easy and as rosy as it's been in the last few months. I think the markets will get a little volatile sometime in January and sometime later this year. There could be a sizable correction as well. Easy money is not going to be possible. But I think if I have to really pick two themes for this year, it would be IT and FMCG. IT, because I believe that there was a structural breakout that took place last year, which is going to continue for a couple of years. And you could see many of the large cap IT stocks gain anywhere between 20 to 50% even from these prices. So we remain very bullish. And FMCG, because it's coming out of a 2-year long consolidation phase. If you remember, stocks like ITC, Nestle, HUL, just went into hibernation for many, many months, and they've just come out in the last 1 month. So if there is anything in the market that gives me a lot of margin of safety at a 14,000 index, I think it's the entire FMCG pack. It's a business that we understand. If the economy is picking up and, if things are back on track, post the vaccine, I think FMCG looks very interesting, and the charts are already indicating that. In fact, I'm looking at a 25% move on the FMCG index this year. If that were to play out, I think some of the top stocks, ITC, HUL, Nestle, Marico, Colgate, I think could be a star performers this year. So that's where I would recommend your viewers to make commitments into.
All right, Gautam, thanks for that. FMCG clearly looking attractive to you, and 25% on that index. That's quite a bold statement. But as everyone keeps talking about the benchmark getting more and more expensive, Nifty is now trailing EPS or trailing a PE ratio is the highest we've seen in probably over a decade. The broader markets, would you find opportunity there as well? And perhaps safety, given that the index is so expensive? And from the broader markets, where would your themes then shift to?
Well, that's a very fair point. I think we got this WhatsApp forward multiple times in the last 6 months that the Nifty PE is at a multi-year high. And I think a lot of people stayed on the sidelines just on account of that. But the price action has looked completely different. So I think PE might not just be the right way to really play the stock markets, at least in today's times, because I think there are multiple dynamics at play. And I do believe that the Nifty rally is going to pace out a little bit. It's not going to carry on at the same levels. And our working target for 2021 is 15,500, which is nothing great in percentage terms. But I think the bigger opportunity is in the mid caps and small caps. I know if you look at mid caps and small caps in absolute terms, they're already up about 70-80% from the March lows. But in relative terms, which is mid cap index divided by the Nifty, they are still languishing at a 5-year low. So I think the bigger opportunity is clearly in the mid caps and small caps. We see the mid cap index getting past 21,700, and at some point of time in the next couple of years, we see a level of 24,000. So a 20% move on the mid cap index, even from current levels, is quite likely. And our working target for the small cap index is about 8,400, which is also 20% away. So I think if you were to pick quality stocks within this space, and there are a lot of themes which are making a comeback. Auto we like as a pocket, so I think auto ancillary can be one of the dark horses for the coming year. Fertilizer stocks have done extremely well. Sugar stocks have made a good comeback, and consumption in general. So these 3 or 4 pockets, and mid-cap IT, not to forget that. So these 4 or 5 pockets, I think we are very kicked about for 2021. And I think ignoring the index, one should just concentrate on top quality stocks.
All right. Gautam, one big trend which really surfaced post-pandemic or during the entire lockdown period was the emergence of DIY investors, Robinhood traders as well. If you would want to, sort of give them some tips about how to start out and how to spot patterns initially when you're just starting to venture into the markets, are there any tips you can share or any common mistakes that they can avoid?
Firstly, a lot of people like to look at today's data to understand what the future holds. But I always say, I think you have great experience on the charts. Just study the bull market of 2003, 2007. In that period, you had a 900 Nifty becoming 6,000 in a matter of 5 years. There is huge learning coming out of, that entire period. And even the 2013 to 2017 a bull market that you saw, and obviously the 2008 bear market. So study these mega bull markets and bear markets of the past, and believe me, they will really help you to understand what's happening today. And that's what we've done at Goldilocks, because we've used our experience to understand a very unique behavior that's happening today. And I think 2021 is all about going back to the basics, because it's just about the price action. And I make this point all the time. If you were in a closed room, not knowing what's happening in the world, whether it's COVID or the economy or the geopolitical factors or the US elections, and if you just looked at the charts, it was probably one of the easiest uptrends that we've seen in the last 6 to 8 months, because markets just made a series of higher tops and higher bottoms, absolutely in an absolute clean manner. So study the price action, follow the concept of Dow theory, look at the moving averages. I think they are very important, because I know a lot of people who got in very well, but got out very early, thinking that, okay, now it cannot go higher and therefore it's going to correct. But if somebody just simply tagged along the price action or in a particular stock using the concept of trailing stop loss with the moving averages, where you made 10%, you could have actually gone on to make 100%, because there are so many stocks, which have doubled in the last 6 months. So the concept of Dow theory, the concept of moving averages, and when you talk about patterns, I think substantiate that with volumes. I know a lot of people just look at price action to study patterns, but we like to really combine it very well with volumes. And if the volumes are great, usually those breakouts, tend to work very well. I mean, look at a Jubilant Food, a Bajaj Finance, a Voltas, for that matter, even an Infosys, absolutely clean breakouts a few months back.
Right, Gautam. Point noted. Last question from us today. One chart for 2021, and perhaps our producer can bring that up on screen while you're talking about it. Your favorite chart for this upcoming year, what would it be?
Well, my favorite chart for the upcoming year is clearly the FMCG index. I mean, if you look at the chart, you will understand that it's broken out of a 2-year range. If I'm not wrong, it currently trades at about 34,000, and our working target for that index is about 42,000. So I think we are very kicked about it. And if you see the manner in which some of the FMCG stocks have rebounded, look at an ITC, a 170 has become 200, 210 very quickly. And I wouldn't be surprised if at some point of time this year, ITC hits the 300 mark. So that's, big returns if it were to play out, because the 200 becoming 300 for a large stock like ITC, I think would be big returns. So I'm really betting very big on FMCG for this year.
All right, Mr. Shah, well, thank you so much for taking out the time to chat with us this morning. That was Gautam Shah of Goldilocks, and he's clearly upbeat on the FMCG index and particularly on ITC. 300 rupee possible on that one. So perhaps our viewers are taking note and some of them booking in their positions. But thanks for joining us this morning on BNSN.